Thank you for joining the class today. Um, and just a couple of reminders, we have our um, quiz 2 due tomorrow, and spreadsheet exercise 1 is also due tomorrow. In today's class, we'll talk about the spreadsheet exercise 1. I'll take you through that exercise a little bit, not everything, but just, to give you some hints. I know most of you have already done it, um, uh, but just to clarify some of the things. I will also go through some um, uh, questions, basically like some calculations that you can expect in your coming exam 1. And do remember that all of the 3 exams are administered through lockdown browser. So you will be monitored, you will be recorded throughout the exam, and you will have access to all your notes that you can bring, but no access to digital resources and digital equipment other than your calculator. So make sure that you have got that in mind. And I have also embedded an Excel sheet within the lockdown browser exam. And what that does is, like, will be a basic sheet that you can use to do some of your calculations if you prefer to use Excel. And the Excel file will open only after you start your exam. So if you click on it before you have started your exam, it may not download, it will give you some error. So yeah, just make sure that you have that in mind. It will start working after you start your exam. Just in case you run into any technical difficulty while you are in the exam, make sure that you let me know, send me an email. And at that point, you are allowed to use your phone and take a picture of the problem that is happening on your screen so that I can give you another chance after we resolve the issue. And the exam will be open for a whole week. You can attempt at any time. But once you start your attempt, you will have 2 hours to finish it. Okay. A lot of the questions in the exam will be like, theoretical. So it's very important that you go through the material, have your clear concept on the formulas and also the material. Please skim through the book, read through the book as well, and read through the PowerPoint slides and watch all the videos that I've posted. There will be some calculations, which are, I think are a bit more of a technical nature. So I will solve some of those problems that you can expect. Like, it's not going to be the same questions, but something similar. So that will be few things that we're going to go through. Now, let me share my screen. Okay, can you see my screen now?
Yes.
All
Yes.
right, fantastic. Okay, now I prepared these few things for you, but let's first start the spreadsheet exercise 1. And I hope you have already done most of this, but just to, in case you might have some confusions, just to clarify. And remember that if you have made any mistake, any error, and you want to resubmit, you can do that as well. This is due tomorrow. Okay, now what we have to do is that there are several sheets in this exercise. So we have got income statement 2 and then income statement. If you click on the income statement 2, you have got this kind of sheets. You have got these formulas built in, but these formulas are not actually working, but these are just hints for you to use these kinds of formulas. Now, this sheet can be used as a help to complete the income statement, this sheet right here. And the only thing you need to complete is these yellow cells. That's it. The rest is not required. Okay. So that is one of the things. Okay, I also need to do this one, probably in yours. But if it is not highlighted in your sheet, you don't have to do it anyway. Okay. Similarly, if you go to balance sheet 2, you've got a similar situation. You've got some numbers, some formulas. You can use these to get help to solve balance sheet right here. And again, you have to complete these yellow cells only. Okay. Okay, so I was trying to help some students the other day, so I started to complete this. Let me remove those numbers. All right. So you will have to complete these yellow cells. And then we have got this ratios sheet. And again, those formulas are given for calculating the different ratios. And you then have the ratios sheet that you need to complete. So only these yellow cells need to be completed. All right. Now, I'm not going to do everything, but I'll give you some hints to help you do the exercise. Okay. Now, in order to complete the income statement, for example, we have got the income statement for 2018 that is already complete, so we don't have to do anything right there. But for 2019, we have an incomplete income statement and we will have to complete it. Okay. Now, how do we complete this income statement? There are a few things that you can here's some additional information that you can use in order to complete the sheet. But like, just in case, if when you go here, cost of sales, for example, this cell, and then you go to the income statement two, and you look at the cost of sales, you've got a formula right there, which is equal to B30. All right. So that means the required information for the cost of sales is given in cell number B30. So when we go to the income statement and we make this equal to what do we have in B30, right? Right down here, we have got the cost of goods sold, right? That is what we need. Cost of goods sold or cost of sales is needed, and that is given right here, cost of sales. So when we make it equal to that, it is equal to, the formula says equal to B30, press the enter button, and you got the cost of sales or cost of goods sold. So it's that easy, nothing difficult. Now we have to calculate gross profit. And we know that gross profit is equal to sales minus the cost of sales. So you can right away build your formula, sales minus the cost of sales, which is the next cell, and you get the gross operating profit. But just in case you don't know how to calculate this gross operating profit, you can go to income statement two sheet and look at the formula. The formula is given right here. So what is the formula? The B6 minus B7, and B6 is sales and B7 is cost of sales. If you enter that formula in your income statement, as we did right here, you get your answer. Similarly, you've got selling, general, and administrative expenses. Now, where do we get this number from? If that is given somewhere here, we will be fine. But you see, we don't have that number given here. You can go to the income statement too and see what that says. So you've got a clear number. So you've got the number given right there. Okay, so what you can do, you can copy this number and paste it, but I would say the best way is to press this equal sign in the required cell and then go to income statement two and click on the selling, general, and administrative expenses for 2019 and then press enter. It automatically brings that number over here. You see, similarly, the next one is the other expenses, and you can see that the other expenses number is also given right here. So we can do the same thing. We make this equal to, go to income statement two, and make this equal to other expenses. All right. And then for the next one, there's a formula that you will have to build in order to calculate EBITDA. So that is how you complete uh, this exercise. So you will have to complete the income statement in this manner, and then you'll have to complete the balance sheet, and then the ratios. Does that sound good? Any question?
That was very helpful because I was kind of lost, but now with you doing those demonstrations, it makes a whole lot more sense.
All right, I'm very happy to hear that. Yeah. And bear in mind that I'm always available to help. So just in case you run into a problem anytime, between the classes, just let me know. I can clarify the things in email or a phone call, or we can have a one-on-one session as well. So that is it. So the balance sheet is also pretty simple, no big deal. One other thing that I would like you to do is the common size analysis. Now, if it is right here in my copy, I have not highlighted it. So if it's not highlighted, I don't require you to do. You get that benefit. But anyway, if it is highlighted in your sheet, then you will have to do it. What we do in the common size analysis is to convert the whole income statement into a common size. Common size means converting all of these numbers into a percentage of the largest number on the statement. Okay? And we know that the largest number on income statement would be the sales, because then we subtract every other thing from the sales. So sales would be obviously um, the largest number. So we convert all of these numbers into a percentage of sales. Okay. Now, the way we do it, 2018 has already been done. But to do the 2019, what we do is that in order to convert, for example, this sales into a percentage of sales, of course, that is going to be sales is 100% of sales. The way we do it is we take that number equals to, take that number, whatever that is, and divide it by the sales itself. So all of these numbers will have to be divided by sales. Now, in this case, because we're doing that for sales, so sales divided by sales, of course, is equal to 1 or 100%. 1 means 100%. So what you can do is to, click this percent sign in order to convert that into a percentage. Now, we'll do the same for the next one. So we'll also divide that next number, which is the cost of sales, and we'll also divide this by sales. Remember that we divide all the numbers by sales. And now we can see that the cost of sales is about 61% of the total sales, which means that 61, when we make a revenue of $100, $61.3 go towards the cost of the sales, and the remaining like $39 dollars will go towards our gross profit, and the other expenses will have to be covered from that. And you repeat the same process for this whole thing. And we don't have the remaining numbers here, but you would have completed the income statement before we do the common size analysis. So that's how we go ahead with it. Now, another easier way is when we're here, when we build the first formula, and because we want this divisor to be the same number for all of these divisions, when we are on that divisor in our formula, we can press the F4 button on our computer, and you can see that this dollar sign appears before and after the B column reference. What that means is that when we drag this formula down, this divisor will not change. Okay? So what I did is that when I drag this formula down, you see, it does all the calculations for me. Now you can see that it's like, some of these numbers are zero. These are not actually zero, but these are small, less than, So what we can do is that we can increase the decimal. Okay, all right. So the reason for these to be zero is that we don't have these numbers populated here. Okay, so that's the reason. Or some of them might be too small, so you'll have to increase the decimal point. But in this case, these are zero because we have those cells not populated. We don't have the complete income statement right here. Okay. Now, what it did is that I just built the formula for the first cell, and then it does all the calculations. For example, in selling, general, and admin expenses, what we will have to do is that we will divide the selling and admin expenses by the sales. And if you see, again, you can look at the formula. It divides the selling, general, and admin expenses by the sales. So it divides all the numbers by the sales itself. That makes your life easier. Just, you build the first formula and then drag it, and it does all the calculations for you. Okay. Now, the same way we go to the balance sheet, we'll have to complete the balance sheet in the same manner as we did. And just to give you a hint here as well, we already have cash and cash equivalents. We don't have the receivables, so we have to find that out. Now, if you make this equal, and we go to our balance sheet number 2, we have the receivables number given right here. You see? For 2019. So I click that and enter it, and I got the number. Inventories number has already been brought here, so we're good with that. Other current assets, so you make this equal to, we go to balance sheet 2, and other current assets are these. And for the next one, you can see that we have got a formula, sum of all of these above numbers. So you can do equals to sum, which adds those numbers that we include in the formula. And we select these numbers, so that will be the total current assets. I close the parentheses, and it gives me the total current assets. So in the same manner, you will have to complete this whole balance sheet first. Okay, and after that, we will do the common size analysis. For 2018, that has already been done, but for 19, we will do it in the same way that we did for the income statement. So what we do is the largest number on these on the balance sheet is, of course, either the total assets or total assets, total liabilities and owner's equity. This number, or the total assets, this number. You see? So we will divide all the numbers by the total assets. That's the simple thing. So let's do that. We'll make this equal to, we take the cash and divide it by total assets, divided by total assets right here. Now, when we press enter, we will get an error. Reason being that we don't have a number for the not current assets. We'll have to total assets. Okay, so we'll get an error because we don't have a number. That's a 0. So we'll get an error right here. And it says you're dividing something by 0, which goes to infinity. That's an undefined number. But once we have a number here, we will be able to get a percentage right here. Okay. You can do the same trick right here, because we have to divide all the numbers by the total assets. So once you're here on the divisor, denominator, press the F4 button. And what that does is that when you drag the formula down, the divisor will always remain the same. Now we get all of these numbers as errors, reason being that we don't have the total assets yet. Sorry, after returning from the trip, I have been going through some strange kind of flu. I've got recovered, but still a little bit of suffering. Just give me 1 minute. Let me get refreshed. All right, I'm back now. So do you have any question here so far?
No, no,
Okay, fantastic.
no.
Okay, now let's go to the ratios. Same situation. So when we go to the ratio sheet, here's what we need to do. So we have to calculate these ratios. For this, we need to remember the formulas. Of course, you've gone through the material, you've gone through the lectures, so you remember the formulas, right? What is the formula for current ratio? Can somebody tell me? Current ratio formula would be current assets divided by current liabilities. Okay? Just in case you don't know what that formula would be, you go to the ratios sheet and it is telling you what you need to do. You will have to go to the balance sheet, and on the balance sheet, you will go to cell number B12. Those are the current assets. And then divide it by the balance sheet cell number B28, which are current liabilities. Okay, so that's how you build it. So simply, if you remember the formula, you don't have to consult this complicated formula right here. So you simply go, we know that current ratio is current assets divided by current liabilities. So I click equal, okay? And then I go, current assets and current liabilities are both on the balance sheet. So I go to the balance sheet right here, and I have got my current assets right here. And then I will divide this by current liabilities. What are the current liabilities? They should be right here. Total current liabilities right here. It will be this number. Okay. Now, my answer is going to be to give me an error because I don't have a number for the current liabilities yet because I haven't populated my balance sheet. But that is how you do it. You divide current assets by current liabilities and you get your answer. Similarly, for the quick ratio, the quick ratio formula, you may remember, is that current assets minus inventory and then divided by current liabilities. So I make this equal to, and I will have to start the parenthesis because I first need to remove the current assets from inventory from the current assets. So I go to the balance sheet, okay, and I click on the total current assets, which is this number, minus inventory, which is B10, and I will have to close the parenthesis and then divide this by the total current liabilities, which again is an empty cell, so it will again give me an error, but that is how it works, okay? You will have to build the formulas in this manner in order to get your answers. Just for your reference, let me do this one because we have the 2018 balance sheet is complete. So we go to the 2018 current assets and divide by current liabilities. So let's do that. 2018 current assets are 35,681 divided by the 2018 current liabilities, which is total current liabilities right here, 30,114. I press enter and I get the answer. This is the ratio, the current ratio that I got. Similarly, you can get the next one and the next one. You can have these ratios once you complete your balance sheet. So these are contingent upon each other. So if you haven't done the balance sheet, you will not be able to do the ratios. Okay. So these ratios are very important to know. I mean, you don't have to remember the formulas. You can write your formulas down on your sheet of paper. But I always recommend that you remember the formula. Use your formula sheet just for reference, just in case you forget a formula and you have to consult your notes. Good idea, but try to remember the formula so that you are quick in the exam. Any question on the spreadsheet exercise?
No.
All right, fantastic. Okay, now let's move on to the next part where I have picked up some selected problems, which are the kind of problems you can expect in your exam one. Remember, exam one will open up for you soon. I think it opens up tomorrow. Make sure you have your attend. We have got 3 exams. and your lowest exam score will be dropped. So your best two will be counted, but don't um, don't skip any of those exams. You never know which is going to be your best attempt. Okay, so don't skip any of the exams, even though your best two will be counted. All right. Now, um, so a lot of those questions in your exam would be like theoretical, like how to interpret the formulas and what we mean by the different terminologies in the two chapters that we have learned so far. But you'll also expect some problems. Okay. And those problems are mostly related to the ratios. So if you remember, if you know the ratios formulas, you will be able to solve these problems very easily. Now let's look at the first problem that this will be the kind of problem that you can expect. A company has revenue of 800,000. Revenue or sales is the same thing, okay? A gross profit margin of 40%. So gross profit margin is 40%. Okay. Um, and what that means is that the gross profit is 40% of the sales and an average inventory of 300,000. So those numbers are given. What is the inventory turnover ratio? Now, so this is the requirement. What is the inventory turnover ratio? What we need to know is what is the ratio formula. I have written that down for you here. Inventory turnover ratio is equal to cost of goods sold or cost of sales, we call it, divided by inventory. Okay. Now let's pull those numbers from the problem. We have got the sales given in the problem. Okay. The CGS, we need the CGS in the problem, but it is not given to us. Look at the problem. We don't have the cost of goods sold given to us, right? But we need for the inventory turnover ratio, we need that CGS. So we'll have to find it first. And we have got, gross profit. Gross profit is not given, but we can easily calculate it because the problem tells us that gross profit is 40%. Okay. So what that means that it is 40% of the sales. I'll make this equal to 40%, 40% multiplied by the sales. All right. So I got the gross profit. Okay. Now, the next thing is inventory. We have got the inventory. Now, for the formula, what we need is we need inventory and we need CGS. So we don't have the CGS right here. We do have the inventory, but we don't have the CGS. Okay. So let's first find the CGS. If we know that this gross profit is equal to the sales minus the CGS, as we did in the income statement earlier in the previous problem, right? In order to calculate the gross profit, we subtract the cost of sales from the sales. So how do we get this number then? Okay, can somebody help me? What would that be? We know that gross profit is equal to sales minus CGS, right? Sales minus CGS would be equal to gross profit. We know the gross profit number here, and we know the sales, but we don't know the CGS. So we can rearrange the formula. CGS would be equal to what? Sales, you can rearrange the formula, minus the gross profit. It's simply like, arithmetic equation. You just simply rearrange it. Okay, you take the CGS to the other side, that becomes positive, and CGS would be equal to the gross profit goes to the other side of the equation, that becomes negative. So that would be the formula. So in order to get the CGS, we make according to this formula that is equal to the sales minus the gross profit. All right. I got that number as 480,000 is the cost of goods sold. Now I'm ready to calculate the inventory turnover ratio, which is CGS divided by inventory. Now I have CGS and I have inventory. So equals to CGS is 480,000 and divided by inventory, which is 300,000. Okay. Press enter and you got 1.6. So you've got the inventory turnover ratio is 1.6, which means that your when you buy inventory, you can sell it 1.6 times during the year. All right. Any question on this?
Hey, can you hear me?
Yes, I can.
So in the exam,
Mhm.
you said this would be an example of a question and there would be an Excel document. And just to
Mhm.
confirm, we can have a piece of paper with notes and formulas on it, but that is
Exactly.
okay.
Mhm.
Um, Another question I would have, this says 1.6.
Uh,
Will the answers be multiple choice on the exam?
exactly. Similar
Okay.
to your weekly quizzes. Similar
Okay.
pattern.
Okay. So,
Yeah.
and while I'm asking questions, um, so the Excel spreadsheet won't have anything built into it. We will simply have to go in and um, we'll have to memorize the different
Mhm.
terminologies for each thing to make sure we understand it. Is that
That's right. That's right, Angela. So that is the purpose. You will have to build. You can use your calculator, or you can use Excel. You can bring the formulas on a sheet of paper, or you can use your book or whatever paper resource you want to use. The thing is that applying it is the trick here. You know, you've got the formula, but how do you apply it?
yeah,
And it's up to you whether you want to use Excel, but you'll have to build your formula yourself.
yeah, that is definitely the trick. I hadn't figured it out yet, but it is a trick. My book is electronic.
Mhm.
Um,
So in that case, and most students have the same thing. And honestly speaking, when you are on the exam, you know, you've got 2 hours to complete the exam. You know, reading the book during that time is not a wise idea.
no,
You know, so the thing is that you would have already got, you know, your formulas and your notes. That is the best thing that you can have. Formulas and notes, whatever you want to bring.
okay.
Um, but for the sake of the integrity of the exam, I will not be able to allow
Mhm.
any electronic research. You know,
Okay.
even the system will not allow you to use
Yeah.
anything else. Yeah.
Last question. If there were
Mhm.
two things that you would encourage me to go study prior to doing the exam, what would those two things be other than what we're doing right now?
Okay. Those would be our the lectures that I have posted. You know, I have all other recordings posted as well. And also skim through the chapters. I don't, you know, I wouldn't, you know, require you to read the whole chapters in every detail and try to learn all the problems, but skim through the chapters so that you have a broader idea of the concepts.
Okay.
Okay.
Thank you.
And also, like, you know, your practice quizzes and your weekly quizzes will be a lot of help as well. And that is why I give you like 3 attempts to do your weekly quizzes. The thing is that, you know, you also get grade for the weekly quizzes, but you also get that chance to go back and correct it so that you understand what went wrong and how can you do it better. Make sure that you understand those quizzes and the problems given there.
Okay.
All right. Thank you
Thank
for
you.
asking those questions. Yeah, very, very good questions, Angela. Any other question? Okay. And so these questions for your coming exam, these questions would be probably, you know, the kind of difficult ones that you can expect. So try to be smart on these and try to play around with the formulas. Okay, now next question. A company had sales and revenue is the same thing of 800,000, net profit after taxes, so that is net income 20,000. So we can start to note those numbers down. We have got sales of 800,000, we have got net profit of 20,000, a total assets turnover ratio of 3. So assets turnover ratio is given. So the ratio is given to us, assets turnover ratio, and that is 3. Now, the trick here is that we need to know what that assets turnover ratio is. Okay, because if we don't know that, then we will not be able to make sense of this. So what is the total assets turnover ratio? Assets turnover ratio. Let me write that down. Can somebody help me? That basically is sales or revenue divided by assets. This is the formula for assets turnover ratio. So you can bring this on your notes, but I highly recommend that you remember the formula, because when you remember the formula, you can quickly imagine what's going on in the problem. Okay, so that helps a lot.
The assets, that's
And
total assets.
yes, total assets. Yeah, total sales divided by total assets. Okay, so the that would be the total assets turnover ratio. And the question is, what is the return on assets? So this is again, we need to know what the return on assets formula is, because if we don't know the formula, we cannot do anything. So the total the return on assets formula is equal to the profit, which is the total net profit divided by assets, total assets, total profit, net profit divided by total assets. So now we look at the formula. What do we have in the formula? We have the profit number given, 20,000, that is given to us. So profit, but we need to find the assets. The assets are not given in the problem. Okay, but we have been given the assets turnover ratio. We can use this to find the assets. We can rearrange this equation. If you do that, this will assets will be equal to. Can you rearrange this for me? Asset will be equal to mhm, sales divided by the assets turnover ratio. Make sense? Just simply rearranging this formula, arithmetic equation rearranging, because assets is something that we need in the formula for return on assets, but it is not given in the problem. So we have to find assets first. Okay, so now we know that the equation for assets is assets equals to sales divided by the assets turnover ratio. We have the assets turnover ratio and we have the sales. So we can now find that out. Equals to sales, which is 800,000, and divided by assets turnover ratio, which was given is 3 right here. This one, okay. Oh, sorry. Let me do that again. Equals to sales divided by this cell, which is asset turnover ratio is 3. So I get total assets of $266,667. Now I'm ready to calculate my ROA, return on assets, because that is equal to profit divided by assets. Now I have profit and I have assets. Okay, so that is equal to profit, net profit divided by total assets, which I just calculated, and I get 0.08. So what that means, that return on assets, our company is earning 8% on the total assets that have been invested in the business. Question? All right, good. So let's move on to the, yeah, somebody has a question?
Oh, no, I was just saying I didn't have a question.
Okay, fantastic, fantastic.
Will you send
Now,
this,
then,
are you gonna send this spreadsheet out or no?
yes, I will send this out to you.
Okay, thank you.
Yeah, along with the recording. Okay. Uh, all right. So the next question, number 3, a firm with sales of 800,000, net profit after taxes of 40,000, total assets of 1.2 million, and total liabilities of has a return on equity of. So which means like we have to calculate the return on equity. So first thing, we need to know the formula for return on equity. And that formula, I have written that down for you. Return on equity is equal to net income divided by total equity. Income by equity. Now we can see in the problem that total net income is given 40,000. 40,000 is given. Okay. But equity, we don't have the equity number given in this problem. So that is another piece of the puzzle that we have to find first. We first need to find equity in order to calculate return on equity. So let's write the data down from the problem. We've got sales of 800,000. We have got net profit of 40,000, which we need in the formula. We have got assets and we have got liabilities. So we can use that information to calculate equity, right? Okay.
Professor, the
Yes, please.
liabilities in the Excel column says 80,000, but it's 800,000. Sorry.
Okay, thank you for that correction. Okay. Sales, that might be okay. Anyway, let's do it 800. Thank you. Whatever that is, we're doing the calculations. Okay, so we know we have this accounting equation. Assets are equal to liabilities plus equity, right? That is the balance sheet equation. So what we need equity. We need equity for our formula. We have the income, but we need the equity. So how do we calculate equity? Rearranging this equation will give me equity. Equity will be equal to assets minus liabilities minus, correct? Let me know if I make any mistakes so that we don't make mistake and get it right. So that is the formula for equity. Now I can calculate equity. Equity equals to assets, which I have the assets 1.2 million, and minus liabilities. So liabilities is this so right here. Okay. When I do that, I get the total equity equals to 400,000. Now I have equity and I have net profit, so I'm ready for the ROE equation. ROE is equal to the net profit, 40,000, divided by equity, which is 400,000. Okay. And I get 10%. All right. That means the business is earning 10% return for the equity holders, and equity holders are the actual owners of the business. So it is earning 10% for the equity holders. You can see the total return on assets is 8%, but for the equity holders, the return is 10%. Okay, good here. Okay, if there's any problem, any question, just stop me. Okay, next one. Leeson's has sales of 3,000, total assets of 2,500, and profit margin, which is basically the net profit margin. Net profit margin is 5%. What that means, the net profit margin of 5% is that our net profit is 5% of our sales. Okay. The remaining 95% goes to these different expenses. The firm has a total debt ratio of 40%. Debt ratio. Now, we need to know what debt ratio is, what is the formula, and what is the return on equity. So this is what we need to find, return on equity. Same thing that we did before, return on equity. So we know the return on equity formula. That should be net income divided by equity. Okay. Do we have the net income number here in this problem? No, that is not given. We have the net profit margin, which is 5%, but they have not given us the net profit. So we need to find that out. And divided by equity. Again, do we have the equity given in the problem? No, we don't have the equity given. So this would be probably a more kind of complicated problem that you can expect, because you'll have to calculate two things. All right. So we know that return on equity, this is the formula. Um, okay. But we need to find the income, and we need to find the equity. So let's write those numbers down. Our sales is 3,000. Our assets are 2,500. Our profit margin is 5%. So can we use this number to calculate our profit? 5%. Of course, the profit would be equal to, we know that the profit margin is 5%. That means 5% of the sales. So equals to, profit would be equal to 5% of the sales. So 5% multiplied by the sales. You got it? Or if you want to put it this way, we know that profit margin or net profit margin is equal to income divided by sales. All right. So what would be income? You can rearrange the formula. Income would be equal to profit margin or net profit margin multiplied by sales. Simply rearranging the formula. And that is what I did. I multiplied the profit margin, which is the ratio, 5%, and I multiplied this with the sales. So I get a profit of 150. Now I have the income or the profit, but I need equity. Okay. How do I calculate the equity? Well, I have some other information, but equity has not been given. But I know the debt, which is, no, I don't know the debt. Debt is not given, but the debt ratio is given. Debt ratio, debt ratio is equal to total debt divided by total assets. All right. So what would be debt? Debt would be equal to debt ratio multiplied by assets, right? That is simply rearranging the equation. So using that formula, we can calculate debt. Now, when I already have assets, and using this formula, I can calculate debt. And when I have debt and assets, I can calculate equity from this formula that I just used above. So let's first find the debt. Debt would be equal to the debt ratio multiplied by the assets. What is the debt ratio? The debt ratio is 40% and multiplied by the assets, which are 2,500. So our total debt is 1,000. What will be the total equity? You can use the formula, equity formula here. Equity is equal to assets minus debt or liability, or debt is the same thing, right? Liability and debt is the same thing. So that would be equal to assets 2,500 and minus liabilities, which are the debts. Okay, that comes out to be 1,500. So my equity is 1,500. Now I have everything ready for the ROE. I know the equity and I know the profit. So return on equity will be equal to profit, which is 150, divided by equity, which is going to be this number right here. And when I do that, I get 10%. Okay. Now remember, these will be some of the problems that will be taking a little bit more time on your exam. So I recommend that, you assign a little more time to these and don't take tension. Okay. And probably this one, like the Leeson's sale, this would be probably one of the most difficult uh, problems that you can expect. So if you know this and you can play around with these ratios formulas like just we're doing right here, you would be good in the exam.
How
And
many
also make sure
questions is it? The exam, how
uh,
many questions is it?
well, it's gonna be less than 35 questions.
Okay.
Yeah. So by looking at the time, when I was setting this up, um, the time is pretty good for solving the exam. I mean, like, if somebody just, is stuck and sitting there for hours and doing nothing, of course, then we need unlimited time for that. But if you are doing it and you're playing around and you know what to do somehow and you need a little bit time for thinking, you would have ample time to do that.
Okay, thank you.
You're welcome. All right. Next one and the last one. Jupiter Explorers has 6,400 in sales. The profit margin is 4%. So that is the basically when it talks about profit margin or net profit margin or profit or net profit, this is the same thing. So that is 4%. That means our net profit is 4% of the sales. Okay, we had a similar situation above where the profit margin was given to us, in one of the previous problems. So now we know how to play with that. There are 6,400 shares of stock outstanding. So this company has 6,400 shares outstanding in the market. So these many shares are available in the market. Okay. The market price per share is $1.2. So each share is being sold at $1.2. What is the price earning ratio? Okay. So the question is to calculate price earning ratio. So first we need to know what is price earning ratio. I have written that down for you. Price earning ratio is equal to the price per share, which is given to us $1.2, right? And divided by earnings per share. Earnings per share or income per share. Do we have that income per share? No, that is not given. So we have to find that out in order to calculate the price earning ratio. Price per share is given, but earnings per share is not given. So let's do that. We have sales of 6,400 given in the problem. Profit margin is 4%. Number of shares are 6,400. Market price per share is $1.2. Can we calculate the earnings? Again, using that formula, income or earnings would be equal to profit margin multiplied by sales. So profit margin is given is 4% and sales is also given. So we can do to calculate the earnings equals to profit margin 4% multiplied by the sales multiplied by 6,400. So I get the earnings. Okay. Now, when I have the earnings and I have the number of shares, can I calculate the earnings per share? Of course, I have the earnings and I have the number of shares. So dividing the earnings by the number of shares will give me the earnings per share. So earnings per share would be equal to earnings divided by the total number of shares, 6,400. And that gives me 0.04. That means 4 cents. So this company earns 4 cents for the shareholders, for each share of the shareholders. And now it's easy. I have the price per share and I have the earnings per share. So the formula is now easy. Earnings per share is equal to price earning ratio is equal to price per share divided by earnings per share. And that comes out to be 30. That means the price is 30 times more than the earnings of the company. the price of the company per share is more than the 30%, 30 times more than the earnings per share of this company. So that's pretty much it for today that I planned. Um, but if you have any other question outstanding or anything from the discussions today, please ask.
This is very helpful.
Oh, I'm happy to hear that, Andrea. Anyone else with any question? Okay, so if there are no more questions, we can call it a day, and I will share this Excel sheet uh, along with the video as soon as it becomes available, most likely later tonight. Please expect it in the announcements.
Thank you.
You're welcome,
Thank you so
Angela.
very much.
You're welcome. All right, guys. Thank you for joining the class today, and take care and have a good night. Hey, sir.